Mr. Uhel Barrickman.
Welcome. Tonight we have as our guest Rex Patterson, the PVA of Barren County, and Jeff Sharp, the county attorney. We'll start with you, Rex. What's PVA stand for?
Well, it stands for Property Evaluation Administrator, and that name has only been in effect since 1968. Back in 1850, when the Constitution created the office, it was known as County Commissioner. And then in 1918, it was changed to Tax Commissioner. And then in 1968, they changed it to Property Valuation Administrator. Rose many names, spells just as sweet, I guess, but they changed the name to that.
Now, let's clarify something in the beginning, because I've had a lot of questions asking me about this over the years. Who is your employer?
Well, this is the thing that makes the office such a difficult one. It is a state job, as I said, created by the Constitution of the state of Kentucky. And we come under the Revenue Cabinet, Property Valuation Division. They have to approve everything that we do. We have to meet their criteria. But then it's a county office because we're elected by county. And it's probably the most hybrid and most difficult, one of the most difficult offices in the state, for the fact that we've got to answer to two different people for two different reasons. We have to answer to the taxpayer because we're affecting their life, and we have to answer to the Revenue Cabinet because if we don't, they're going to affect my life.
Now, Jeff, whose expense is it mainly? Is it the counties or the state?
The expense of the PVA office?
Yes.
Well, y'all have a budget, county budget, don't you?
Right.
So I guess the county funds part of that office, and I suppose is some of your people on state payroll too?
All our payroll is state. The county has to furnish us a place to have an office and necessary equipment and so forth.
Now, Rex, what are your duties as PVA?
Well, the one that's most known I'll get to in just a minute. Our primary duties are record keeping of property for tax purposes. And the one that most stands out, I guess, is we're required to assess all real estate in Barren County for tax purposes. Now, we are not a tax office. This is something that I want to clarify to everybody, because I think the PVA office, I compare it somewhat to an undertaker, for the fact that everybody wants you to do a good job, but they want you to do it on somebody else. And but if you don't have it, you can imagine what would happen without an undertaker, and without a PVA, we'd be on gravel roads, because if people didn't have taxes, we wouldn't be where we are in Barren County. And Barren County is one of the top counties. It's a difficult county to assess because we have lakefront property, we have a lot of industry, we have recreation department, amusement department, Cave City. We've got farms. We've got two different kinds of farms. We got some that are on real good land. We've got some that's not so good land. And then of course we got residents and a lot of building going on. And we got the lakefront property, as I said. All of these things require a true 100% value, which is what they demand from the Revenue Cabinet. And so our primary job is to put a proper assessment on all property according to how it is.
Now, the tax you're talking about is commonly known as an ad valorem tax. What is an ad valorem tax?
That is for actual value. That is,
and it's a tax on the thing,
right,
whether it be property, tangible or intangible property, but it is a tax on the thing.
That is right.
Is that the basic tax for the county and the schools?
It's a large percentage of it. And this is why I take the job so seriously, because this tax probably is the highest lump sum tax that individual people in Barren County have to pay. They get that lump sum tax around the end of the year. They may pay more in income taxes and so forth, but lump sum payment. And these taxes contribute to the schools. Another thing that makes Barren County difficult is that we have 3 cities that we have to code and assess for: Park City, Cave City, and Glasgow. We have 3 school districts that we have to code for: Caverna, Barren County, and Glasgow. So it's a lot of work to get these coded right, but this is a large percentage of the income for each one of these particular districts and entities that we have to get it money for. Now, what percentage, I'm not sure.
You have raised the question that I have wondered about. That's a Caverna district. Do you assess the whole district, or you just assess the part in Barren County, and Hart County assesses that?
That's right. We do our part in the Cave City and surrounding area there. We code it. We have to work with the Hart County people, not per se as work with them, but they get they're a smaller county, and they get their tax rolls ready before Barren County. And in the past, that's been a problem. Last year, we were able to get it because these school districts, the fiscal courts, all of these people that I mentioned that we are coding for, they have to set their tax rates according to what the assessments are. And so the school at Caverna has to wait till they get both Barren County and Hart County before they can set their tax rate. But Caverna is the highest tax rated school in our county.
Jeff, what is the first process in him determining the taxes? Who files and when and so forth?
Well, when somebody buys a piece of property, is that what you're getting at? They have to, when they buy that property, they sign up for the taxes to be paid by them. Once that's done, they're on the tax rolls at that point. They have to pay that tax by a certain date. If they pay, of course, the taxes become due May or September 15th is when you can start paying them. They have to be paid before January 1st, not to be delinquent. If they pay before November 1st, they get a 2% discount. If they pay after November, they just pay the base amount of the tax bill. If they pay after January 1st, they have a 2% penalty. After January 31st, the bill basically, at that point, a 10% penalty is added, plus you get 12% interest per annum on those bills. And then if at that point also I become involved in collecting that tax, and there's a 20% county attorney fee added to anything we collect after the taxes become delinquent and they're turned over to my office.
Now, of course, you're speaking there principally of real estate.
Right.
Now, when is the date, or what is the date that the citizen that owns real estate is supposed to file with the PVA office the property that he has for taxes? And again, I'm talking about real estate.
I'm not sure what that initial date is that they have to file it. You know?
January the 1st to March the 1st. You're supposed to list it with the PVA. That is, if you've added a new room, or built a garage, or added a swimming pool, or something that's an addition, you're supposed to report that during that time.
And I don't think the people generally understand that. That's what I want to get
Well,
to.
we're required to run it in the paper, but again, they don't understand it. If there's been no change, we already have the information, and it's not required, but it is the law that the people are to report what they own. but most cases we get the information from building permits, we have an excellent man that works in the field that goes out and he sees this. We get it from electrical reports. A new house may be built. Because we do not have a planning and zoning in the county, there's no building permits. But if they set up an electrical hookup, it's pretty well indication they're either going to put in a mobile home or build a house, and we go by and check on that. But the people are supposed to. But and then sometimes neighbors tell us too. So we all work together for a better community.
Now you have reminded me of another question. Mobile home, is it generally considered to be real property or personal property?
It's real property, and they can. We have what is called a homestead exemption. This is something that I've tried to make an effort since I've been in to let people know. Everybody that's 65 or over is entitled to what they call a homestead exemption. That means anybody that was born in 1935, and so if you're listening this tonight or whatever, and you were born in 1935, you need to come by the PVA office and sign up for the homestead exemption. And what that means, you get $25,400 off of the assessment. This is to help senior citizens, and also people that are disabled can sign up for disability. You have to be fully disabled, and you have to sign up every year for that, and you have to prove that you are disabled and drawing disability. The homestead exemption, of course, if you're 65, you're not going to get any younger, so you don't have to sign up at once. But people that live in mobile homes get that homestead exemption. And the maximum is $25,500. If they live in a mobile home that's, say, worth $15,000, that's all they get is $15,000. They wouldn't pay any tax if they signed up for the homestead exemption, and it was less than $25,400. So it is real property.
Whether it's on wheels or blocks or whatnot, it's still real property.
Yes, indeed. As a matter of fact, if you have a recreational vehicle, one of these travel homes, and you live in it, and you can, and we have those down at the lake that people pull in down there and they live. And the law states that that can be taxed as
real estate.
Real estate.
Now we will continue here on the real estate for a while. There are other taxes you're concerned with, but let's continue on with the real estate for a while. Do you have any guidelines for assessing real estate, or is it strictly up to you and then subject to the approval of the state?
Well, as Jeff said a few minutes ago, the guideline that we have to start with are current sales. And of course, Barren County is one of the better places to live. And you try to get the true market value from the sale. But that is not always the true case. You have to take into consideration if it's an arm-length sale. That is a willing buyer and a willing seller with no undue influence. If you're having somebody that's being foreclosed on, or if it's an auction to settle an estate, some of these things vary. And we have family father will sell a son some property.
Or gifts.
Well, there's a gift, but he may sell it to him for $20,000.
But he may give it to him also.
Right.
Go ahead, I'm sorry.
But the value has to be for it. So our first criteria, and we're required by law. In 1990, when the Kentucky Education Reform Act was started, they determined, because a lot of counties were not producing enough income to increase the education program, they determined at that time, and they could do it now with computers, was that you were going to have to be 100% a fair cash value. Again, that's the arm-length sale. And it had to be done by 1994. Some of the counties did, some of the counties didn't, and you and some of the others may recall that Barren County in 1996 had not done what they were supposed to do, and they had an emergency assessment. And Pankford sent 5 or 6 people in here, and they reassessed a lot of the county and took it way up. And that was because of that rule. And so we're required by law to get 100%. We get that value from those sales. If there's not sales, and sometimes some of this property is not a lot of sales, like industry. So you have to go another way. We got the cost approach, how much it would cost to replace that. And then in some rental property and income-producing property, you have to base it on income. So there's several different ways you have to go to get all of this worked out, but we're trying to get 100% fair cash value for tax purposes. We don't just reach up and pull out a figure, and then if you come in, we negotiate it like trading a car. We try to have a reason, and that was something I told people when I ran for office. We'll have a logical reason for your assessment. And people, when they come in to see where we get these figures, we try to show them. We can be wrong because we may not know everything that they go, because we do not go and have not gone inside the houses. We think that it's a 3-bedroom house with 2 baths. It may be a 4-bedroom house with 1 bath. And we may not have the right characteristics. So we want the people, when they get a notice, if we've got it unduly, we want them to come in and we want to get it straight.
Now, the only notice they get, though, is where it is not assessed in accordance with the fair market value, or at least your office in the state doesn't think so.
What happens, we have to review. I like to say that rather than reassess, review. That same law in 1990 said that we had to review every piece of property every year. But of course, we have 23,500 parcels in Barren County. We have 486 square miles. We got 311,040 acres. It's hard to see all of that every year. But we also try to make sure that it doesn't go over 4 years. That's the limit you can go. So it has to be looked at or reassessed every 4 years. And so we do what they call a quadrennial report. We have to do 1/4 of the county 1 year, or you can do it however you want to. Some people do it industry 1 year, residential 1 year, farms another year, so forth. But we have to do it every 4 years. It's supposed to be, to bring it up to fair cash value. Now, when we review or raise your assessment, then you have to be written a notification. And if you get the assessment and you think it's not correct, then you certainly have a right to come to the PV office. We have a period that's required by law for 2 weeks to let people come in after they've received their notice of an increase to tell us why they think it's unfair. Just because they don't like to pay taxes, or just because it went up too much this time, those are not legitimate reasons. But if we have something that's wrong, we certainly want to correct it. We're trying to be fair. That's all we want to do. And I'm like everybody else. I don't want to pay any more than I have to, but I want my house to be treated with respect and assessed to the proper value. And so then when we send that notice, let's say you come in and we clearly cannot work out our problems, then the taxpayer has a right to go before a real estate board made up of local real estate people that are dealing in real estate all the time, experts and know the county, and they will meet after 25 days after the close of the debates that we have with the people, and then the people can come in. They bring stuff to back up their reason. They've got maybe their insurance policy, their appraisal that they've had, something to back up why they have this figure. You can't just say, well, I don't like paying taxes. But then the board will review, and if they determine that we're incorrect, or that they can go with us, or they can go with the taxpayer, or they can come in between or go above. And then their word is not final. If the people still think that it's too much, then they have a right to go before a state board. That's done a little bit later, and at that time you have to have an attorney, and you really have to have your facts together. A lot of times this is industry, because you're talking about assessments of millions of dollars, and and they have lawyers on on retainers, so sometimes they take them to the state. But since I've been here, we've had nobody to go to the state, and I don't recall anybody ever going to the state board here.
Jeff, anytime you want to break in here or add something, that's fine. How much of this do you have to report to the state every year?
How much of what?
Your assessment, or what all do you have to report?
All right.
Your office, what reports do
We have
you
a
to
thing
make?
called the first recapitulation. And they have a bunch of formulas, and I don't even know how it all works, but you send in the sales. They compare the sales top to bottom. They compare, with the computers now it's a lot easier, because if you've got something that is on the books at $50,000 and somebody comes in and buys it for $100, you're way off. And then if you come in and you've got one that's on here for $100 and it sells for $50, you're way off. So they take the good sales and see about what average we got, and they put all these in. They come up with what percentage that we're assessing at, or what we're set at, and you have to be within 90% of fair cash value, or they won't approve it. And then they have a thing called a coefficiency dispersion of efficiency, COD, coefficiency of dispersion, I think it is. And what this is, from top to bottom, you have to be within a certain percentage points, 20 percentage points. So they look at everything, and we have to come in there. No more can they do like they've done in the past. Used to be people would say, well, the PVA is down at the pool room, so everything's all right, but our property's not going to go up. That can't happen anymore, because the revenue cabinet has the wherewithal. You can't hide the figures. It's all in the computer, and they can tell what you're doing.
Well,
And
in the
so-
final analysis, don't they have the final say-so, other than going through the court, the tax court?
Well, first of all, if we send in that first recap and it's too far out of line, they'll send it back and say you got to do more. And if we fail to do it, as they did before, they will come in and they will do it. And what we try to do, by being on the local level, we try to assess according to location, which is, of course, the best thing to do. If you live downtown, your house is worth more than if it's out in some place of the country. If you turn off the main road onto another side road, same house is worth less. You go down another road, each time you turn off a main road, the value of the house, in theory, goes down, the old location thing. Sometimes these people come in there in a hurry, and they try to get the money up. And when they did this in 1996, a lot of people that were affected by this recalled the congestion down at the courthouse and appealing all of this. And we're trying to keep them up there by doing it fair and equal, and right now we're in pretty good shape. We are going to be a little later than I would like to be doing it, because what we did this year, we are going to revalue and review 3/4 of the county, for the simple fact that the farmers are entitled to an agricultural value, and some of them haven't been getting it, or they haven't been getting it correctly. And with all the problems that the farmers have, we're putting forth an extra effort. Our people are working around from morning to noon. You won't, they say, come in the state office, you see people sitting around. You won't see them sitting around. Everybody's trying to get this up so that everybody that is entitled to the agricultural exemption, those that are under-assessed, and those that are over-assessed are being changed. We've got a lot that's gone down. Matter of fact, just before I left today, they showed me one that went down about $40,000. The house that was up in over $300,000, but it's actually worth about $290,000. And so we're coming down. And we also notify those people, because we want them talking too.
Who appoints the local review board?
The fiscal court appoints one, the judge executive appoints one, and if you have a city of a certain class, which Glasgow is, the mayor appoints one. And they serve for 3-year terms.
Are they staggered, or all of them serve for 3 years?
I'm not sure. I think it's staggered.
I don't know.
You don't know.
We had one to go off that was on last year. Last year it was David Bailey, Ed Smith, and Charles Elmore. This year, David Bailey, Ed Smith, and Gail Myers will be the board. So Gail comes on. I think she was appointed by either Freddie or the fiscal court. And I think Ed Smith is appointed by the mayor, and David Bailey. And we're fortunate to have these kind of people on the board. We really are. These are good people, and they just try to be fair.
They know real property.
They do?
They do, I know that. Yes, indeed.
People in Barren County are lucky to have people like that that'll take that responsibility, because it's not pleasant to sit there and talk to people under those conditions, and we're lucky to have them.
Well, I think we've talked enough about real estate, at least for now. Now, what about cars?
Cars.
How the cars? How are the cars? I know how they are assessed, but I think you should explain the procedure for what goes on when you pay the tax, when you renew your license, and so forth and so on, and how do you control that?
Okay, well, first of all, let me say we've got 45,700 motor vehicles in Barren County. And they have to be coded according to the districts, and they have to be coded monthly. When I ran for this office, people asked me, said, who's going to be your deputies? And I said, well, I'm going to hire the best people available. And fortunately, I have Moray Foster. Moray is the receptionist, but she codes these vehicles. We have these 45,700 vehicles. They have to be coded, whether they're in the city of Glasgow, Cave City, Park City, Caverna, Glasgow, or Barren County Schools. All of those have to be coded. It's a tedious job, and it's an exacting job. I have made a recommendation to the people that they send us the list according to addresses. That way, when we got on Cherry Street, we would go down through there and save time. But now they're alphabetically. So they have to be coded for the tax rolls. Now, the assessment itself is put on by the Revenue Cabinet, the Motor Vehicle Division. We do not put the assessments on it. We can change the assessment under due information. For instance, if it's a 99 car but it's got 100,000 miles on it, it's high mileage, it should be lowered. And we have a lot of problem with this. People don't understand it. They come in the door upset. You got my 1966 car at $3,000. Well, evidently somebody up there hit the wrong button. And
that's the reason for this program, is to explain what's going on.
Well, maybe this will save it. But what they will do, and unfortunately because of our location, it's inconvenient now, they have to go, they get their property tax bill on their vehicle and their license, and they have to go to Pam's office, Pam Hodges Browning office, and they go out there and they say, well, this tax is too high. I got a 1996, got $3,000 on this 1996. Well, she says you got to go to the PVA office. Well, they got to drive back across town to the PVA office, come in, we look at it, we check everything, we make the adjustments in the computer. Pam's office cannot make those adjustments on the motor vehicle. Then they have to go back across town, and sometimes people get a little irritated, and I can understand that. But we do not set the tax rates. We have no control over that initially, but we can change it if it is wrong. We've had some that's hail damage that people decided to keep, and it showed that it was a 1995 Cadillac or whatever, and the computer says it's worth this much. But when they bring it down there and it looks like they've been playing with a hammer on it, then of course we can lower it down to a fair value. So we do, that's how that works. We also have to code and value over 300 boats. There's a lot of work goes on in this PVA office, and I've got a wonderful staff to do it. And the people in Barren County are lucky to have them because, first of all, they're hard working, and not a one of them has a mean bone in their body. So I know that everybody is being treated fairly as we understand it. We do not intend to assess anybody too high, and we certainly can't too low. The thing that I want the people to know, in spite of the fact that we're having to do so much, and going to be so many changes, that we are assessing the property and not the people and not the situations. We have some people come in some sad situations, but the truth of the matter is, if their house was to be sold, they would want the price that we've got on it, not the price that they want it taxed at, because of the condition that they have physically or because of their fixed income or whatever. So it's a difficult task along that line that we have to separate the people from the property. We're assessing the property. There's some people that if I was assessing them and their situation, we wouldn't put anything on it. But I am sworn by law and forced by the Revenue Cabinet to put the value on that property as we think it is.
Jeff, how about delinquent taxes? Are there a lot of them?
Yes, and that's my main responsibility when it comes to taxes. Every county has a principal person who's responsible for collecting the taxes against the people who don't pay. And once the sheriff, he goes through his process of collecting there at the sheriff's office, and somebody doesn't pay by January 1st, then he has his advertisement to sell those taxes as delinquent taxes. Once that sale takes place, if nobody buys that tax bill, then it's basically the county buys it, and I become responsible for collecting it. And when of course I can go back, there's a 1-year tolling period, and then I can go back 5 years past that to collect. And when I came into office, you know, I initially looked at that and I saw there were a whole lot of taxes that hadn't been collected, you know, even way back to '93. And one thing we did was send out new letters to all those people all the way back to '93. And I think if you ask Pam Browning at her office, you'll find out that we had pretty good success on that. Lots of people came in and paid those. They just hadn't received a bill in a while. You know, when the first year it came out, they received a bill and they didn't get a bill after that, and they either forgot about it or whatever. But once we reminded them, a whole lot of those came in and paid. I think I just looked between 1997 and '93, there's 980 some that are still delinquent for those periods of time. And of course now we're getting ready, '93 is getting ready to get to the point where we can't collect those, but '98s are coming on now. We'll be able to start collecting those as far as what I do to collect them. So that's going to increase the number more. And of course how we collect those taxes is I send out the letters, and that's a lien against a person's property, so I can foreclose on their property. Typically what happens is when that person gets ready to sell that property, it's going to come up in a title opinion. That lien's going to show up, and that's when they're going to try to satisfy it. But occasionally if a property just sits there, they're not selling it, then the issue never comes up to them. And sometimes banks will foreclose on property. When they do that, they name us in the suit, the county in the suit, and then we become involved in doing a cross complaint against the taxpayer. And of course we come first, we come before the bank. And those are some of the best ways we can collect, because in those situations the bank is paying the court cost, and you know, if the property doesn't bring what the advertising fee is, the bank's probably going to have to eat that cost, and the county doesn't have to do that. So like I say, we have a whole lot of tax bills out there that it's kind of like the IRS. They don't do a audit on everybody, because if they don't have the manpower and staff to do it. We got 900 and some tax bills out there between '93 and '97. I can't go, and we don't have the manpower or the resources to go out and sell all those pieces of property, because it'd be 900 and some lawsuits. And so we kind of got to pick them out like the IRS does. We pick out certain ones and try to make, you know, go after those, and then hopefully the word will get around and other people come in and pay their taxes to clean those up. We have situations when it comes to that it's almost costs the county more to collect some of those taxes than the county makes. I had an example the other day where a farmer came in. He had a big piece of property, his farm property, had a little lot beside his property, about a half-acre lot with a shack sitting on it. The problem there, it wasn't his, somebody else owned it, and the person who had owned it had died. And of course no estate was ever done. There's probably 50 to 100 relatives that would have taken that house under the intestacy laws. It was such a rundown piece of property, it's only getting taxed at about $30 to $40 a year, you know. So if you add up the total tax that's owed on that piece of property, it's around $240 or so that's owed for the past years. And we're in a spot where if we move to foreclose on that property, it being delinquent taxes owed on it, the county's going to have to pay the filing fee. We're going to have to pay the advertising for the sale. And if it doesn't bring, you know, if the sale doesn't bring that much, which it may not, then, you know, the county's going to have to eat that cost. So you're going to not only then those taxes are still owed, but then you're having to pay the cost of the sale. So you got to kind of pick and choose which ones you're going to go after, and we try to look at them and go after the ones that we know we're going to make some money on.
Now you speak of the lien that goes on the property when the taxes aren't paid. Is there any penalty once the lien is filed? In other words, does interest continue, or?
Yes, of course there's, like I say, after January 31st, there's a 10% penalty, and then there's 12% per annum per year that's got to be paid, and that just keeps building up. So the longer you go without paying it, the more you're going to have to pay. And plus, after it becomes delinquent, like I said before, there's also a 20% county attorney fee that's added to that, and that's a surcharge. It doesn't come out. Used to, it was fixed up where if you paid the interest and the penalty and the tax, the county attorney's 20% would come out of that. But now the legislature changed it 2 years ago where the county attorney's fee is actually a surcharge. It's over and above that. So it costs quite a bit more if you wait around and don't pay it.
Back to you, Rex, on real estate, something that I meant to ask you a while ago, and it slipped my mind, and now it comes back. Man's got a farm, and it's agricultural farm. It's listed for agricultural purposes. All of a sudden, he creates a subdivision that is not for agricultural purposes. Or maybe he sells it to somebody else who creates the subdivision. Who reports that?
We get that through the deeds. An agricultural value is applied to any acreage 10 acres or more. So if this farmer had 20 acres, he set off 10 for subdivision, then the other 10 acres he would still get the ag value on, and it would still be agriculture. The other would then become residential. We get plats showing where he's gone in there and surveyed it off. And again, our man out in the field would see the building going on. And then we assess each lot individually because all lots are not the same, just like all houses are not the same. So then they change that, and we have to keep up with an addition and deletion. What they do, we would delete some farmland, and we would add some residential, and we have to keep up with all that. And one thing that's happening in Barren County is that they're cutting up the farms and selling them in 5-acre tracts, 6-acre tracts, whatever. And so we're little by little, it's seldom anymore that a 100-acre farm sells. It still happens, but not so much. But Barren County is increasing in parcels. As I said, we have 23,300 and increasing daily, because just about all transfers that come through are part sales. And part sale is one where they've cut up a piece of land and took a smaller piece off. And one of the things he was talking about on this delinquents, I would like to get this out to the people, is sometimes not getting it. Well, first of all, not getting a tax bill is not grounds for not paying your taxes, because if you own, you know you owe taxes. But sometimes they don't get the tax bill because what we do, we record the information off of the deed. If we could ever get the attorneys and the real estate people to put the actual mailing address of the buyer on the deed where they would like it to go, then this would eliminate some of this. Because what happens, this thing comes through, maybe he lives on the Edmonton Road, he buys something on the Bowling Green Road, and whoever writes the deeds puts on where he's living now. Unless the person that's entering it in the computer wants to assume that he's going to be moving to the Bowling Green Road, then he'll put the Edmonton Road. The bill will go to the Edmonton Road, and it delays everything. And sometimes it delays it enough that they have to pay a penalty because they didn't get their tax bill on time. So I would like for people, if they haven't, when they know the tax bills are going out, and the sheriff always announces it, if they don't get the tax bill, they need to contact either us or the sheriff and let them know what the right mailing address is that they should get it. And our cutoff time is January the 1st. And so whoever owns the property, January the 1st, unless specified in writing, that's where the tax bill will go. You set it on January the 2nd, you own it January the 1st. And the tax bill will come to you. A lot of times the buyer and the seller work out, the bill will go to you, you'll send it to Jeff, or you people, you know, as an attorney, you prorate it up in the year some. Yeah. But sometimes there's a misunderstanding there. The tax bill comes to you, you just lay it aside, and he one day looks up and sees his name in the paper. He hadn't paid his taxes. Then he called you and said, oh, you know, we worked this out and we forgot doing it. And so we have problems like that. Some of this could be worked out if people are just informed. And that's what we're trying to do, is educate the people that we're not there against them, we're there for them. And once we get the taxes, everybody at fair cash value, the tax rates should go down. Now, I had a fellow that come in the other day that moved into Barren County from Warren County, and he said, I was surprised that Barren County's tax rates are higher than Warren County. But the reason is Warren County is already at the level they should be and have been for some time. Therefore, the people that do the taxing, the school boards, the fiscal court and so forth, they are limited by law of increasing their revenue more than 4% without having to go before the people and getting it okay. That 4% increase in revenue is coming off of reassessed property. So if the assessments go up, then the rates are going to have to go down. So the people that's already paying their fair share will actually see a drop-off. And once we ever get it leveled, it'll be fair and equal to everybody, the school boards and the people that need the money to give us the benefits that we receive in Barren County. Will get the money they need, and the people individually will have to pay less. And that's what we're striving for, to get equalized assessments so that everybody pays no more than their fair share. And when they do that, then the tax rates ought to be a lot lower, or somewhat lower than they are now.
Rex made the point about the addresses. That is one reason we have a lot of delinquents. We don't have a lot of good addresses for some of these people, and it's just the reasons he explains why we don't. Once we send out our first notice that we're going to try to collect those taxes, a lot of those letters come back to us marked not found. We turn those over to Rex, and he tries to find them again. And we've also taken at the county attorney's office a proactive step of ourselves trying to find them also. We got a lady from Western Kentucky who's an intern. Doesn't even cost the county anything. She's doing it for a grade, but her principal duty is finding these people, and she's had pretty good success. So we are getting some of them found that weren't found before, but that is a problem. If we could get everybody notified that they owe these taxes and they started paying, then maybe the rates wouldn't have to go up so much in the future.
As has already been pointed out here, but I'm not sure that the public generally always understands this, the rate of taxation has nothing to do with your office. It has nothing to do with the county attorney's office, other than he is the advisor of the fiscal court. But as far as the county is concerned, the fiscal court sets the rate for the county. As far as the schools are concerned, the school boards, as far as the cities are concerned, the cities, and then there is a state rate also, and that is established by the state.
Right.
And I don't think everybody understands that. They somehow or other they tie the rate in with the assessment. It has something to do with the assessment, but the assessor has nothing to do with the rate.
Other than getting the fair value of to give them the figure to see what they have to set. Now, the way the state sets their rates are, when we send in this recapitulation, the recap, after they get as many as 75 of the 120 counties, and by the way, I want to throw this in, we're number 13 in size above the 120, so we do have a little bit more work to do. But when they get as many as 75 counties in that they have got standardized, then they have an idea of how much revenue is going to be generated throughout the whole state, and then they set their tax rate. So just on the like on the local level, where the city knows they've got to have so much money, when we give them the figure, then they see how much they have got to have, and they use that figure to figure what rate they've got to have to get it. The county does that, the school does that, and the state does that too. And they have to look at 120, but as long as they get 75%, it is, not 75%, then they come up with a rate and get it back to the counties, and that's how it's established. None of these figures are just reach and pull. There's a reason for all of it.
Now, who figures the tax bill?
Who figures the tax bill?
Yeah.
Well,
I'm not talking about the assessment. Who applies the rates to the assessment and comes
Okay.
up with the bills?
Once we get the final approval from Frankfurt, then we turn it over to Pam, and she sends it to all these people for their taxing purposes. They apply their rates, then they send it back to her. Then she gets them printed. And then when they come back to her, they go to Barney, the sheriff, and the sheriff sends them out, and he collects them. So we set the assessments on the property. The taxing facilities that we've talked about apply their rate. The clerk gets them printed, then the sheriff collects them, and then if they don't pay them, he comes after them.
And again, you was talking about the setting of the rates. They're not unlimited in how they can set those rates. It's like he said, once the assessments come in, then like the county, for example, they can only set their rates that would generate 4% of additional income for them than they had the year before. So that's not, if they go over that, then there's possibility there could be a vote. There has to be a vote among the county to determine if they can go higher than that. So they're not just unlimited in what they can set that rate at.
Yeah, that's one of Julian Carroll's bequests to the state. It's a bad law, but in my opinion. But it's
well. One thing that helps Barren County, again, I sound pro-Barren County, and I am. One thing that helps Barren County is that 4% increase is only on reassessments. It's not on new houses or new sales. So, and that's what's been offsetting most of the counties down through the years, is enough houses selling that the revenue generated off of new houses. But what you're having, people that buy the new houses are paying their fair share, where some of the people that haven't been redone for a while are not. But this 4% is not restricted on new houses. So and we had almost 300 new houses last year that went up, and also we've been averaging, the real estate people for the last 2 or 3 years have been averaging about 200 transfers a month. So all of these new sales and all this is kicking the revenue right up there, and they're not restricted on that. So if I'm correct on that.
How often does the clerk advise you of the transfers, your office?
That's Pam's job. The law says that no later than the 15th of the following month we have to have it. But Pam's been easy to work with since I got in there, and we are trying to keep as current as we can. So we pick them up on a weekly basis. When we get into the same building, we hope to be able to just be, if you record it tomorrow, we ought to have it within 3 or 4 days on the books and in the computer. We're trying to get it as current as we can. We've got a long way to go, but we're working on it.
Now we haven't talked to any about tangible personal property. Everything's been real estate. Is there a tax on tangible personal property?
Yes, there is. Now, some things that used to be taxed have been removed. There used to be stocks and mutual funds and so forth. They've been changed. You now still have bonds. Some of the exceptions of the bonds are federal, state, and school bonds and so forth. Those are not taxable. But any bonds you're required to report. And businesses are required to report their inventory. And people are required, if If you sell something on a land contract, you're required to report that because you are a lender. If you own a mortgage on something, all of these things have to be reported. We send out the forms and the people fill them out and bring them in, and we put them in the computer. But again, those rates are put on by the state, and and that has to be done by May the 15th. So people that are starting out in business, any new business, don't know they have it, what will happen when they file their income taxes and their accountant puts down their deductions for depreciation and so forth, then the revenue cabinet will send us an omitted, and they will have to pay a penalty and interest just like on the others that's past due. But we have to keep up with all of that too. Now that's not public record. You can't walk in and see how much Jeff owns in his investments and so forth. The other stuff, you can come in and any time and check and see if your neighbor's property, real estate is assessed right. But this is classified information. We cannot give it out to people. But we do have to keep the records for tangibles and intangibles that people have.
Now, once the assessment is made on the tangibles and intangibles, what's the process, if any, to review those if you're not satisfied?
I don't know that. I don't know. What these? It's a little bit technical, and I don't do it. But they have different classes of on this little sheet that we get, and you put down when you fill it out, you put it in what class it is, or your accountant does, or whatever, and then all we do is put that in there, and once they set the rates, it automatically applies it in the computer. You don't question it because you're the one who gives us the information. Right. You say it's this, we put it in there at that. Now, if the revenue cabinet pulls yours and reviews it, just like your income tax, if you put it in the wrong division, then they'll make a correction. You'll have to make the payment. But we do not determine what it is. You determine what it is when you turn it in, just like in your income tax.
What about notes?
Notes? Unfortunately, that's catch as catch can, but we can catch them.
They do have to be listed.
They do have to be listed, yeah. If the notes, if you're drawing interest on those notes and loans and again, the land contracts where you sell a piece of property and instead of going through a mortgage company pay you, then you have to report that as income. And it's an intangible that you have there.
Now, in the event you haven't done that, and then you get caught, or the estate gets caught when somebody dies, or the state catches it some other way before you die, what are the penalties, if any?
I'll turn it over to this man.
That's something that county attorney's office isn't involved in. I guess the state's involved in collecting that, so, and I don't know what the penalties are.
Well, actually, they can go back 10 years. And if you've got a note that hasn't been listed and you sue on it, you're barred. You can't collect in court as long as the tax and the penalty has not been paid. So
we're not in the collecting end, so I don't know about all of that.
No, but they have got to report it to you and so forth, and then you send it on to the state. We've covered a lot of stuff here already. Now, some people try to evade taxes and some succeed. Is there any penalty, as far as you all know, for somebody who's been evading taxes and gets caught?
Well, as far as we can do, we can go back 5 years. If we find a piece of property that back in the boonies somewhere that the fellow forgot to report, and we find it, and we can go back to 5 years, make them pay the full assessment for over a period of 5 years plus penalty and interest. so it can be quite expensive. And if he doesn't, then the lien can be filed, as Jeff said, and it'll be paid before he can ever sell the property or his heirs ever sells the property.
Now, does the state send out any manuals, appraisal manuals, or anything to educate the public?
Well, we're constantly, and this is one of the requirements of being the PVA, you have to go to at least 30 hours classroom. And this is something that I did last year and we're continuing to do in my office. We had all the personnel in the office went to as much schooling as we could and still did as much work as we had to do last year. And we were awarded 15 certificates, which is the most the office ever had, to learn the proper ways to do all these things, not only the assessing, but the record keeping, the laws that's required, what our limitations are and all. Yeah, they're real believers on education, and I'm just delighted. I've been really pleased with the Property Valuation Association. They're a structured group, and they take pride in what they do, and they've been helpful. As a new one, I have a problem. I've got some that's been in for a while. I call them, and nobody's ever failed to help me. We have taken some of our personnel. What I do, I want us to be the best office we can be, and in order to do that, I want to learn from the people that are best. So when I'm talking to people in Frankfort, what is the best office? What is the best one doing this? And we take people and go visit with them, and everybody spends the time to help us, and we're trying to learn to do it all right. We're not just fumbling along trying to come up with a figure on the property. We're trying to have a legitimate reason.
We got about 3 minutes. Jeff, you got any comments you want to make on the county attorney's office generally?
Well, not really. We've, of course, done lots of things, I think, that have improved the office since we've gotten in there. We've, of course, now open on Saturdays, and lots of people like that. And it seems like a lot of people make excuses. I can't come in because I just work 5 days a week, you know, and you tell them, well, we're open Saturdays, and it kind of shocks them at first. And that's been real successful. And of course, me going full time, that's really been an improvement, I think. Somebody comes to that office, they're not going to find me at my private law office. I'm going to be there at the county attorney's office if I'm not at the courthouse doing county business. So those are two things that have really went well with. We was talking about that money that the county attorney's office makes, the 20% on these delinquent taxes. By jumping in there and collecting some of that, that's not money that goes in my pocket. That money has to be spent in the office there. And we have actually, by improving the collections, we've taken that money and used it to update our computer system there in the county attorney's office, which has helped with the cold check collection process. So it's just a snowballing effect by getting in there and doing that collecting work. It helps the county in other ways, because that's not money I have to get from the county then. It's money I've raised from these people who hadn't been paying their taxes. So that's all I guess I got to say about that.
Who has to furnish you with the computers and so forth? Is that
We
the
buy
state or
we buy our own. We do now. We're trying to become as self-sufficient as we can. There's some debate to whether the county's supposed to or the revenue cabinet, so we're doing it on our own.
You're doing it on your own?
Yeah. See, we get paid for our assessments, and the fiscal court has to pay us some, the cities pay us some, and so we have to operate off of that income, but because we have so many parcels, it's adequate to fund the office right now. One thing that I would like to say in closing here, that people, when they get their notice this time, if there's been an increase, be honest with yourself. Would you take that for the property? Not just because I've been paying so much or it's been assessed so much, it's gone up. Is it truly what it's worth? If we've made a mistake, we want to correct it. But just because the assessment changed quite a bit, we'd appreciate it if you be honest with yourself and honest with us, because we're doing your neighbor the same way. We're trying to be everybody fair, and we're wrong. We'll admit it. We're not too proud.
Well, thank you, gentlemen. I think it's been a very informative program and one that the public needed to know more about. Thank you very much.
Thank you for having me.